I'm Robert and welcome to my channel, where I discuss everything automated algorithmic trading, or simply algo trading. Today I'm going to talk about one of my favorite strategies, and I've talked about this before, which is the three moving averages. And here I've outlined what I have in a notation that I've developed that helps me keep it straight when I'm writing things down. That is, I have a fast line of 17, a slow line of 47, and a momentum of 197. And I am using a simple moving average. Now you can use an EMA or any other kind if you want. But we can see on the chart, the red line is the fast line, the green line is the slow line, and the black line is the momentum or the 197 moving average. I've talked about the rules of this before, and we can see when the buys and the sells are. Now you can use accumulation, you can use single position. There are a myriad of ways that this particular strategy just works wonders. In fact, I've even demonstrated through 800 different trades just how profitable this strategy really is. But that's not what we're going to get into today. At least not directly. We know what this strategy does. We've seen it time and time again. Today, we're going to take it to the next step. We're going to use another indicator on top of this one. That is, this is our base. And we're going to use a range filter to provide additional higher quality entries and exits. So let's get this off the chart and let's go to the range filter. Now the range filter strategy is quite interesting, as we can see from the chart. It actually looks for very critical points where the moving averages line up and the range of the market also lines up, as we can see here. That is, for this sell entry, the range starts a downward trend. So this is a very unique situation where we can capitalize on a very explicit situation with an incredible amount of reasonable certainty that the market is going to go in our direction, whether it be short, as the screen now shows, or long, as we can see over here. And we can see how well these particular reference points actually look in terms of the market and how that market is going to go in the direction we want. This isn't perfect, obviously, but it doesn't need to be. The beauty of this particular kind of strategy is that it does reasonable enough that you can either use a conditional based process or a dollar cost averaging process and get a very good entry point where you can actually use higher level positions consistently. For example, with a 10 pip take profit, we can see that all of these would have made a reasonable amount of profitability. But what makes this unique strategy stand out is that you can use 10 or 20 or 30 times the volume of the regular moving averages. For example, for the strategy I use in my own personal account, I will trade the regular moving averages at 10 units because it's a very hyper aggressive approach. But I will trade the additional range filtered entry points at 800 units because they come significantly less frequently. So I've taken this unique approach and I've layered it so that I have a hyper aggressive aggregation at very small units, and I have the potential of trapping much higher, significantly larger positions. Now, there's obviously no guarantee that a particular position is going to hit a take profit zone as easily as we like. But as we can see, it's reasonable enough that it does well. And through the aggregation of these positions, we can see clearly in a bigger picture just how this can work out, such that when you are dealing with a stop loss technique like what I use, it works out very profitable in the long run. And that really is the point of the entire process, to be able to give yourself a market edge in such a way that now, on top of the 800 trades that I would take using the normal 3-line moving average technique, by adding the additional trades of the more focused range filter, I now have a compound trading technique that gives me 2 different layers. And those layers work together to provide an exceptional way of managing my risks and bringing in additional profitability. Now, if you choose to use a dollar cost averaging process, this works very well for mitigating your risks and for keeping your risks very controlled with very limited number of accumulations. But for the purpose of what I'm doing right now, I am using a hyper-aggressive aggregation approach, with the range filter trades being significantly of a control factor for my budget, where I can capitalize on very strategic entry points and take advantage of what those entry points represent. The advantages of this technique, though, aren't just limited to the Forex market. Here we are looking at the Bitcoin market, and you can see just how well this actually works in practice. Using the 3 moving averages, the cyan or teal markers, and then the range filter with the purple markers, you can see clearly how well combined they work even here in one of the most volatile markets there is. Again, knowing the market helps you. In this case, we are dealing with a market that is typically non-cyclic, so I would only use long positions. But in doing so, as you can see from the accumulation standpoint, if you're worried about taking on too many positions, you would only enter at the purple markers. So you have a situation where you can actually control your risks even in a market that has a huge and vicious volatility cycle. For example, here's a good example of a short that works out for a small amount of profitability. You're in and you're out. It's more controlled than the typical market that you would expect. And that's why using the 3 moving average structure along with something to help filter further can be an incredibly valuable technique. You could use a 20-50-100 if you want, or a 20-50-200, or even a 50-100-200. It doesn't matter really what the numbers of the moving average are, as long as they are realistically in the same kind of steps. Those numbers affect and have an impact on duration. But overall, when you look at your chart and you see the benefit of the long and short values, you begin to see just how this plays together in such a way that it helps you put the market on your side. So whether you prefer a hyper-aggressive approach, or you prefer a more filtered approach. This kind of a stepping stone gives you the best of both worlds, with a large array of methodologies to really be able to profit from. So, if you like this video, please hit the thumbs up. Help me grow the channel. Try this technique out. It's very easy. It is a Jackrabbit TV strategy, so if you want to subscribe to it and get access to this wonderful chart, please sign up at my Patreon. Leave me a comment. What do you think of the moving average technique? Or your own favorite techniques for that matter? Let me know. Share your thoughts. Thank you for watching.